It is 10:06 at WPSL 1590, the talk of the Treasure Coast. Time for Money Info, brought to you by Princeton Research, with Mike King in Las Vegas and Charles Moskowitz in lovely, nice, cool Boston, Massachusetts. Hey, guys. Hello, Charles.
How are you?
Hello, Michael.
Yes, good morning.
Hey, guys. Well, you know, something hit yesterday. Of course, Michael is in one of the greatest areas in the world for no state taxes and stuff, right? You don't pay state taxes in Nevada, right?
Right, no state taxes.
Yep. Well,
there's lots of other taxes.
Right,
There's
obviously.
a big, huge sales tax, and
Yep.
there's lots of corporate taxes.
Yep. Well, they Fiscal Times did a survey of the worst states, the top 5 for taxes. Number 5 is Ohio, the Buckeye State. Number 4 is New Jersey. Number 3 is California. Number 2 is New York, where everything's taxed. And number 1, this is a real surprise, because I would have assumed it was Charles's home state.
Yeah, how did we not make the top 5?
But it is not. Illinois, where their taxes have gone up 67% in the last 5 years. Yikes. So,
This is right.
Charles, congratulations. Taxachusetts is not in the top 5 any longer.
You can't tell by me.
And we still haven't heard about the debt ceiling. You know, Jack Lew, the Treasury Secretary, seems to come on TV quite worried about being able to pay bills. We have a $17.3 trillion deficit, and he's waiting to get a little release. So this is the next crisis, I believe, that's brewing.
Oh, boy. When is this one due?
Well,
Next couple of weeks, isn't it, Mike?
yeah, I think that we're suffering through that right now.
Yeah.
Oh, man. Are you kidding?
No, I remember him saying that originally it was supposed to be like March 3rd or something, but then they came out and revised that because they were sending out so many tax refund checks that they brought it back to like the 28th or 24th of February, something in that area.
Wow. Oh, that's cute.
Yeah.
Yeah? Okay.
But today we have Lawrence Rowe calling in.
Oh, good.
Target Energy, which really is quite an incredible little company. They have an ADR that trades in America, and of course, their home base is Australia. But they have almost $30 million in assets, $10 million in acreage, $20 million in production, and they're quite knowledgeable.
Yeah, and that ADR is a 1 for 10. For every 1 ADR you buy, you get 10 shares of the company.
That sounds great. And, and again, you're talking, Permian Basin, and, you know, that seems to be just one of the biggest areas in the world. It just keeps on giving oil. That's amazing.
It may be the most prolific because when you go when you start drilling down, there are several, like 8 or 9 layers, 8 or 9 formations from which you can get prolific oil, not just one. Like in Texas, you have the Austin Chalk, and then the Eagleford, and the Buddha, 3. But in the Permian, there are like 7.
Wow.
And
So
he'll
there's
talk about that.
7 different layers of where they can do
Production.
Production. Wow. That's amazing. That is absolutely amazing. What's very interesting, guys, here, I don't know if the power companies out your way in Vegas or up in Massachusetts have been running commercials, but Florida Power and Light has been running commercials now that they have cut their Saudi oil imports from 45 million barrels down to 1 million, and that they're using natural gas, American natural gas, to power their power plants. Now, they have just knocked down, I think it's 3 or 4 of the older plants, the coal power plants, in favor of the new natural gas plants that they've got popping up all over the state. So kind of intriguing to watch.
Yeah, you know, I was just in New York last weekend.
Yep.
Not this past weekend, but the weekend before, and they were running a story. I listen to 1010 Winds as I get
Yes.
close to the city, so that
All
I
news.
know
Yeah.
where to drive and where not to drive.
Yes, exactly.
But I gave them 23 minutes, and they gave me the world.
That's it. Oh yeah, the old
Anyway,
Westinghouse.
they were talking about PSENG, which is very big in that area. I guess it's from Pennsylvania, New Jersey, New York, Long Island, etc. And they were talking about people getting a huge credit on their bills for the months of January and February, based on some switchover that they have made towards natural gas from heating oil. And the number was, I mean, it wasn't overwhelming, but it was pretty decent. They were saying the average bill was going to see approximately a $40 credit on the average, which is $128 a month. So you're talking about, you know, just short of 36% based on the switch over to natural gas.
Wow.
So that's pretty substantial.
Yeah. Oh yeah.
And also, another little company with news out today has a new CEO, Microsoft.
I've never heard of him.
Nobody's heard of the guy, but he's evidently been in all of the different product development departments. His name is Satya Nadella. And so, you know, from within.
Well, you know, and there's nothing wrong with bringing in a CEO who's done everything in the company. I mean, I think that's a great idea.
Yeah. Well, all of the product development departments.
Yeah.
You know, I don't know that he's an engineer, but he certainly understands the product line.
Right. Right. Oh yeah. Sure. I think that's a genius move on their part. You know, why not? Sure. That's amazing. Well, you know, did you guys see the CNBC story yesterday, which talked about the middle class eroding in the United States?
Oh, yeah.
And it just talked about, you know, various businesses, especially in New York, you know, even retailers like Barney's, you know, complaining now that that there just is not enough money out there for people to buy upscale clothes anymore.
Yeah, but you know, Barney's is over several of the big lines. Like, you know, Nordstrom is high. Barney's is over Nordstrom.
Yeah. Oh yeah.
Pricing. So you know, I mean.
That would be kind of like the
I've
old...
been in Barney's.
Yeah?
I've been in Barney's, and I've been in the Barney's outlet stores.
Yeah?
And I don't even shop in the outlet stores.
Too expensive?
They are very high-end.
Yeah,
Or,
yeah.
I don't know about the quality of their stuff because I don't buy much of it, but they're very high-priced.
Well, the old Saks Fifth Avenue was, you know, way up there as well.
Right.
So, yeah, it's kind of interesting. Yeah, I was thinking... I have never heard Barney's associated with middle class.
Well, exactly.
It was like, wait a minute.
You know, there's a show that I watch on Monday nights called Two Broke Girls.
Oh, yes.
On CBS. And there was a comment last night where the girls went to an ATM, and instead of having $17, they had $1,017,017. And one of them turns to the other and said, "Oh, great. So this is how it feels to be in the upper middle class."
Yeah. Uh-huh. Oh, wow. So, Michael, what's going on in Vegas? Is the economy improving there in general?
Oh, absolutely. I mean, the hotels are full constantly. McCarran Airport has had much better air traffic increasing monthly, a quarter to 0.5% every month. So it's really a great area, and of course the weather is great.
Mm-hmm.
And part of that point, guys, is the fact that they don't have weather issues.
Right.
Yeah, absolutely no weather issues.
Well, see, the problem is, though, the planes that are coming into McCarran are having weather issues in other areas of the country.
Right.
And we've noticed that just in this area, Palm Beach, Fort Lauderdale, Miami, tons and tons of cancellations. Needless to say, it's not weather down here, but, you know, wherever they're coming from.
But if you don't get the planes in from Chicago,
exactly,
and Philadelphia, and Boston, you know, what do you do?
Yeah. Oh, yeah. Yesterday, the Institute for Supply Management reported that manufacturing activity in the U.S. slowed down in January to 51.3 compared to 56.5. Is that a big deal? Should we really care that much?
Well, a lot of it is weather-related.
Okay.
It hit at especially a bad time because it follows the Chinese numbers of purchasing managers, which is below 50. So the combination of theirs and ours was a little bit devastating, coming at a time when we still have the budget crisis. So we have a number of crises, not the least of which is weather and people getting to work. And then,
we're getting 3 storms up here. We had one yesterday. It snowed all day. Not a lot, but, you know, maybe 3 or 4 inches. Today it's beautiful out, nice and sunny. But late today it's going to start to snow, and it's going to be another foot of snow, 10 to 14 inches.
That's epic.
And then it's supposed to be nice on Thursday, and over the weekend there's another storm with, they haven't even said how much snow. But, you know, it's one after the next after the next.
Well, the next storm is to get you pumped up for the Winter Olympics. That's what it is.
Yeah.
Yeah.
As long as the power doesn't go off, well, you know, I'll be able to watch.
Yeah. Oh, my. Yeah.
How about all those bookies just begging you to take Denver?
Oh, yeah.
I mean, you know, I sat and looked at that, and I said, you know, I kind of like the Seahawks, but only getting 2 points, and, you know,
whoa,
they must have made a fortune on this Super Bowl.
Well, we were joking about on our bus ride over to the other side of the state, 5-hour bus ride, about the Super Bowl, and I wonder if there were any of those crazy bets that, you know, that they take on everything, like
of course there
flip.
are.
But on scoring on the first play of each half. I mean, I covered 12 of those, and never saw anything quite like that. Now I've seen slaughters before, but nothing like nothing like this one that was so unique. But wow, it was amazing. Well, Charles, I thought you were going to move down here. You had said something about you're toying with moving to Florida.
I can't leave those adorable grandchildren.
The grandchildren. That's what it is. Okay, I'll move them down too. You know what the heck? Oh,
yeah.
Yeah.
If their parents would let them, I'd have at least one of them here.
Yeah. Oh yeah. That's what's tough for us, because our grandkids are over in Spokane, Washington. So the other end of the world, to say the least. So yeah, kind of crazy.
Can you even get a direct flight there?
Oh no.
I wouldn't think so.
You either go Dallas into Salt Lake and then in, or whatever. It's something like that.
Let's welcome Lawrence Rowe.
Hey, Lawrence.
Good morning.
Welcome back.
Good morning, gentlemen. How are you?
Hey, doing very, very well. What's happening at Target Energy?
Oh, we're gearing up for another big year, I think. So a lot of enthusiasm, a lot of excitement, and hopefully increasing momentum. So that's kind of the view from the trenches, anyway.
That's a great combination.
Yeah.
Well,
we've got a big year sort of planned with a lot of drilling, and we're just looking forward to getting going.
For folks who may not have heard your story, Lawrence, tell us your your prime areas of drilling?
Okay, well, Target works in a number of areas, but the main focus of our activities in West Texas, in the Permian Basin. We've got leases not too far from the city of Midland. We think that the Permian Basin is a wonderful place in which to be drilling for oil and gas, and we're not alone. As you know, there's a huge amount of activity. It's one of the most active areas in the country. We have about, I think, in the basin, there's about 400 rigs running at the moment. Lot of activity, and it's a great place to be working. So that's getting the majority of our focus for the year. It's been a very good area for us so far.
Well, you have a huge acreage position there.
It's never big enough, Mike, and we're always looking for opportunities to expand. But we're happy with what we've got at the moment. We have about 5,000 acres gross, and we're looking to see if we can add to that. It's one of our objectives, in addition to the drilling that we're planning, but to see how we can expand our footprint there.
And you have quite a bit of production as well.
Yeah, the production is, we had a good year last year. We added substantially to our production. We expect to do that again this year. We've got 2 wells now that we're currently completing for production. They were drilled late last year. As you all probably know, there was a fairly severe winter this year, and that affected Midland as well. And a lot of Permian Basin operators have lowered their guidance numbers as a result of just dealing with those issues. And we're no different. We've got a number of wells that we're currently working over, just dealing with some of the after effects of that weather. But we will have those wells back online soon, the new wells, which we hope to have brought online late last year. We're currently doing that at the moment. We've got a completion rig out at our Wagga Wagga lease, and we have another rig out on Sydney lease. So we should be able to be in a position to talk about additional production associated with those new wells, hopefully in the near future.
Now, Lawrence, you didn't really have snow problems. You had ice problems, didn't you, out in the West Texas area?
That's correct. They had some ice storms that kind of swept through around Thanksgiving, and that was just the beginning of a longer winter. And what a number of operators found is that they were not only finding water freezing in the lines, but I think in one case we had a power pole snap in the wind, and another sort of 6 or 7 just followed it down. And the power outages, of course, affects all your pumping equipment.
Sure.
It takes a while to bring that back online. But the folks in West Texas, I think, are quite comfortable with searing heat for a long time. But an extreme winter and extended periods of sub-freezing weather, I think, is more of a challenge for them.
Yeah, that is nowhere close to being normal. That's for sure. West Texas is not used to that, believe me. Yeah.
They were not happy about it, and I guess neither would we. I guess if you're up in the Bakken in North Dakota, that's just a walk in the park. But for us out in West Texas, it was something we prefer to do without.
Well, and you brought up something that I never even thought of, and that's the power. When all of a sudden you start losing power poles and in these storms, and then it becomes a daisy chain, and you lose all sorts of activity there, and that would obviously affect all the pumping mechanisms. That's something I never even thought of.
That's correct. And if the failure is up the line a little bit, you could find the entire lease is deprived of power, and the pumps shut down, and everything sort of grinds to a halt. And there can be quite a bit of effort in bringing those back up again once the power's there. And in our case, we had a whole list, or our operator had a long list of wells that needed to be maintained and brought back online, and it's just juggling those priorities to deal with that. So it just takes a little bit longer than you would think, just to bring it all back. But we're getting there.
Charles, Mike, Charles, any questions?
Well, there's many different layers of production in the Permian. Why don't you talk about some of them, the different layers of production?
Oh, absolutely. One of the issues I think we've discussed before is the remarkably generous geology that comprises the Permian Basin. There is so many geologic formations there that are productive for oil and gas, and that ranges from a few thousand feet in depth down to below 10,000 feet. What we focus on is what we call the Wolfberry section. It starts at the top of the Wolfcamp formation, which is around 6,000 feet, and when we drill through that down to a typical total depth of around 10,000 feet, we generally see oil and gas shows just about the whole way down. I mean, the entire section is saturated with oil and gas. Now, some of those are sands, some are carbonates, some are shales, and they each may require a different kind of completion technique. Obviously, if you're looking at shales, if we're looking at Wolfcamp shales, for example, we're seeing a lot of horizontal activity there, a lot of operators doing a lot of good work drilling horizontally. In the other zones, we can do conventional completions, but the wondrous nature of this thing is that just about every zone will flow oil and gas in some manner. Now it's our job to make sure we can do that in a commercial, in a commercial manner. But it still is a remarkable basin for that. So we will drill to 10,000 feet typically. We will drill through that Wolfberry section, the Mississippi and the Devonian. They all are oil and gas prone. We will also typically test a little carbonate below that section that's called the Fusselman. That is a very productive zone when it generally flows quite well. If it has oil in there, then it becomes a very good oil reservoir, and we have a number of wells that produce from that. And what we like about that is once we've drilled the Fusselman and produced it, and if at some point when we deplete it, we can just go back up hole and complete in that Wolfberry section, and we have a choice where to complete, but anywhere from 6,000 feet down to around the top of the Fusselman. So it's a remarkably generous geology, and it's really up to us as operators to deploy the appropriate technology, and that's obviously evolving, to get the maximum amount of oil and gas out of those zones. But it works very well for us.
Lawrence, how much more expensive is it to go to 10,000 feet than it is to go to 6,000 feet?
The incremental costs, if we're talking about vertical drilling, really aren't that much. Our costs to get to 10,000 feet, this is excluding completions and things later, but just the drilling effort, is about, it's a bit under $1 million. It's reasonably straightforward. By the time you got to 6,000 feet, you've pretty much expended the bulk of your money, if you know what I mean, in terms of deploying the rig, mobilizing it, running your casing and that. So the differential is probably like some difference between, say, 700,000 and $1 million. It's not a lot of money to go that much deeper.
But okay, so that you say the vertical side of it, but obviously there's a cost to the horizontal as well.
Absolutely, and that's where you can really see the costs increase. It's a lot easier to drill vertically than it is horizontally. The horizontal wells will typically cost in the range of $8 or $9 million.
Wow!
In this area, drill to about 9,000 feet. They will often then go horizontal for 4,500 feet. I think they're looking at extending that up to 7,000 feet, and associated with the cost of drilling usually some fairly large multi-stage fracs as well. So it's a more expensive operation. Obviously, you only do it if you believe it's going to be economically worthwhile.
Sure.
But we're seeing some very good results in the region, in the various Wolfcamp shales and the Klein shale. A lot of activity there. And the operators are working hard not only to maximize the amount of oil that they're getting out of the ground, but to minimize the investment that it takes to get to that point. And there's a lot of focus on, I guess, sharpening the pencil, if you like, when it comes to the cost of drilling and seeing how they can get those costs down.
And how long do these wells produce, would you say?
Typical wolfberry well, a vertical well, can have a life of over 20 years. It can be 20, 25 years. You'll get a lot of, the bulk of your sort of flush production comes in the first couple of years, then it settles down with, say, a 4 or 5% decline rate per annum. So it's a very long tail. I can't speak for the horizontals, but I would expect they would have a similarly long life.
And when you're done with that, is it like in the mining business? Is there any reclamation that you have to do to the properties?
Well, the nature of the an oil well is it really has a very small footprint, but typically when you finish with a well, if there's nothing else to be gained from it, you will abandon the hole properly, setting cement plugs within the hole to ensure there's no fluids moving, and you'll then reclaim the surface area. But generally, they take the well and the pad around it. The leaks are usually quite small. And there's not a lot involved.
So it's not particularly involved or costly.
No. Once the drilling is complete after a month or two, they will restore the area where they've actually drilled, and you'll just end up with a sort of flat pad around that well.
Mm-hmm.
There's really not much to it once you've finished.
Lawrence, does that ever recover? I mean, like an old well that's gone through 20 years and it's been capped, and I mean, does that start building back up in there eventually?
I think in geologic time, the answer is yes. It could take a very long time. There are wells, often shallow wells, that you will find that you will actually see some evidence of repressuring, and if you were to open that well up again, you would find that what was a depleted zone can once again produce, but it'll usually be a very small amount over a short period of time. But it can happen, and in theory, again, if you look at it from a geologic perspective over millions of years, you are still in a position where you can be accumulating that oil and gas. But
sure.
You probably wouldn't want to hold your breath for it.
Wow.
And you're also producing in the East Chalkley field in Louisiana?
That's right. As much as we love Texas, we have snuck across the border, and we have production in Cameron Parish. That's a field that we like a lot, as you said, Mike. It's called East Chalkley. We have drilled a well there. Another well was drilled last year that was brought online at the end of 2013. We're just doing some work on that now. We've got a downhole blockage that we're remediating at the moment, but that field is one that we want to do more work on. There's a lot of oil left in the ground, and there's a lot of upside left there as well, so we'll be looking at how we can accelerate that development as well. It probably sits behind us in terms of priority, behind the Permian Basin, but it's still one that we think deserves some attention.
Lawrence, is that on the other side of the border from Beaumont, Texas? Is it relatively close there to that area?
Yeah, that's correct. We're just south of Lake Charles.
Oh, okay, yeah. I know where that is.
But it's an area that's had a lot of production over the years. This was a field that was mistaken. They originally thought it was a gas field. They produced the gas, and then later on somebody wisely had a look down dip and said, oh, look, there's oil here. So depending on your point of view, we've either got an oil field that had a gas cap, or we had a gas field with an oil rim. I prefer the former. And it's something that was kind of literally overlooked, I guess, by previous operators, and we were fortunate enough to participate in its rediscovery, and hopefully we can accelerate the development of that field as we go forward.
Wow. So how many years do you think you're going to get out of the Louisiana field?
Well, if all my dreams come true, we could end up with a dozen wells there, and that could be producing for at least 10 or 15 years.
Wow!
Depending on how we do it. Now, I have big dreams, so
Lawrence's perfect world, right? your perfect world.
I'm an oil and gas guy, so we're naturally optimists.
There you
go.
In
your perfect world, you're looking at upwards of just a huge increase in production.
Absolutely. It's a field that our assessment suggests we had a most likely recoverable oil of about 1.7 million barrels and an upside estimate of about 4 million. They're good numbers. The field itself has produced about 130,000 barrels to date. So there's a big gap between what we've produced and what we think is there, and an even bigger gap in terms of what may be there. So our view is to get some focus on that field, get some more wells in there, and get some of that oil out of the ground.
And so your production should be well. You should have 800 or 900 million barrels by the end of this year, don't you think?
Well, in terms of East Chalkley, we'd certainly want to be seeing that increase substantially over where it is now. There's opportunities for wells to come on at 120 barrels a day, up to 200 barrels a day, depending on the whether we go horizontal in that field as well, which is a possibility. We'd need to drill again another 6-8 wells in that field to sort of fully develop it. And I think if that's going full bore, then you can see 1,000 barrels a day out of that easily. But there's a lot of work to be done before we get to that point.
So if you're adding that to the production in Permian, what does
then
that
things
look
start
like?
to add up pretty well for us. The Permian obviously is where we expect the increase in our production to happen earliest. We have a 9-well program this year. I think that we could easily add 1,000 barrels a day out of those 9 wells by the time we get to year end. That would be a very good outcome for us. And obviously, if we can add more in East Chalkley, then you're going to see the company enjoy a substantial amount of production, increase in reserves and cash flow that go with that. So we're looking for a very strong year, Mike, and a strong end to it. But the key to it is the activity in getting these wells drilled and just, like I said at the outset, building that momentum and continuing to build it.
What is your stock sign?
Stock sign here, we trade on the OTC. It's TEX, as in Texas, TEXQY.
TEXQY.
That's an ADR.
Okay.
That's correct.
And it's like 1 to 100 to the Australian market.
Yeah,
It trades
Australian
Australian is TEX, right?
TEX, yep.
And it's trading around about 5 to 6 cents there.
Mm. And we're trading at about, I think, a bit over around $4.50 at the moment here in the U.S. So it represents, well, in my opinion, it represents very good value.
Absolutely.
Well,
it is a low price.
Sounds great. Charles, any questions?
No, sir.
Michael?
Yeah, I'm really impressed with the production. You've done a terrific job. And so I see a big upside for this company.
Yeah, it sure sounds like it. And it's amazing that all of a sudden, you hear of some of these, if you want to call them newer properties, although they're probably not new, but the public doesn't normally hear about like the Louisiana properties, and you never really think much about oil in Louisiana. But yeah, it's amazing. Lawrence, you got a good story. You really do.
Thank you very much, and we look forward to telling you more about it as the story gets better.
That sounds good. All right. Well, hey, thanks for being with us.
Right. Thank you, gentlemen. I appreciate it.
All right. Lawrence Rowe, Target Energy. They're on the OTC, TEXQY. Yeah, and yeah, that's great. It is a good story, Michael.
Yeah, because he's got like just the acreage position alone. He's got over 10 million in value, and then in production he's got like 20 million. You're looking at $30 million valuation, and there's very few shares. If you look at a 1 in 10, you're just looking at a few very few shares.
Mm-hmm.
In other words, there's like 500,000 shares in the Australian market, and then like 5 million shares in the ADR.
Mm-hmm.
So you got 5 million shares, 30 million in value. So you're looking at a minimum of $6 just in cash value that I see.
Mm-hmm. And how much is the stock trading now?
Yeah, it's trading around 4.5, but it's trading. It probably can be bought around 4.5.
Wow.
The problem with it, in a 1 for 100 ratio, is that when the stock is, I mean, it's just an appearance because it's simple mathematics, but you look at the stock at 3.5 bid, offered at 4.5, and the spread is pretty extreme. I'd like to see them maybe split that stock. I mean, we have people who have bought it who call me on a regular basis, and just all they want to know is what can we do to reduce the spread, because they'd like to buy more, but nobody wants to take a $1 risk or 75 cents risk on a $4.5 stock just based on the difference between the bid and the asked. And I don't know if that's possible to do it with the ADRs, because the ADRs are backed through a bank. It's not the company's, it's not like the
Bank of
company
New
has
York.
put them, right. It's not like they've put them up. Yeah, there are only 3 or 4 banks that even do this for ADRs. I think J.P. Morgan, UBS, Bank Mellon, New York, and there's one other I can't quite remember right now. But it would really help the liquidity in the stock. The liquidity is in the Australian stock, which we can't do anything with.
Mm-hmm.
Well, we can
Because
buy. I have bought the Australian shares myself.
Huh.
I got about 400,000 of them, which I bought and I paid like 5 to 6 cents on the Australian market. The Australian market is getting firmed up. What happened over there is that a fund that had a big position was liquidating, and so those shares came on the market, and that created a little selling over in Australia. But now those shares are all being picked up.
Yeah.
And I'm looking for.
Well, I mean, it's just the psychology of it. There are a lot of people who would, who'd rather buy, 100,000 shares of the stock at 6 as opposed to buying 1,000 shares of it, here.
Yeah.
But again, it's simple math. But it is what it is.
Mm-hmm. Yeah, it sounds like a great story, and it's we're coming into a period of time where, and Mike has been preaching this for 9 years that you've been on the air here, and is the fact that hopefully by 2017 or thereabouts, 2018. We might even be oil independent here, which would be mind-boggling. I mean, we're already exporting a ton of gasoline out of the country. So if we can actually turn that into some pretty heavy-duty profits and keep our prices somewhere where around where they are, that wouldn't be too bad.
Yeah. Well, the thing is, Greg, that if you don't call it U.S. and you do call it North America, North America is pretty much oil independent now.
Yeah. Oh, yeah.
When you factor in, both the
Canadian
and
the Canucks
Mexican property.
Yeah, yeah. By the way, it was really funny. I remember Limbaugh maybe 8 or 9 months ago talking about the fact that after the first of the year in 2014, that Obama probably would okay the pipeline. But he needed to get through the some of the election stuff and to get that out of the way first. and then his election base, which is the environmental base, would be very upset with that. But, at that point in time, they really couldn't do all that much. But I thought that was very interesting that all of a sudden one of the major environmental stumbling blocks was okayed last week. So kind of interesting.
And not only that, but it was okayed in the face of a pipeline explosion. Where was it, Montana?
Yeah. Oh, yeah.
It just burned for days.
That's right. Yeah.
You would expect that would be the least likely time for it to get by. But I guess, there have been enough train wrecks, literal train wrecks.
Oh, yeah.
Carrying oil that, which is worse? Is a train wreck that spills it all over the place worse than the possibility that a pipeline might have an issue?
They're
it's 6 of one, half dozen of the other, really.
They're both dramatic. I remember, must have been 73 when we had a huge derailing of a Southern Pacific train in southern Arizona. It was not quite into Tucson. Down by Benson, and boy, I'll tell you, that thing was an absolute mess, and a real environmental mess for a long time. So yeah, you are correct. It's when you transfer on the rails, a lot can happen. It's just
So Mike, we haven't heard from Casey in a while. What's going on with broadleaf and that whole market?
Oh yeah,
any update there?
Well, it looks like he has a big offer of production. There's a very big marketing company in Kentucky that has given him an offer, and the board of directors has to approve it, and he has to get his accounting in ship shape for the board to approve it. So that's where that stands.
Ooh.
And Casey is just overwhelmed with all the things he's got to do.
Right.
It's a one-man operation. So hopefully he'll be getting those numbers together, and the board will approve the marketing campaign, because he's got the product. The product is excellent. Everybody should try Tsunami, TSUNAMI. It's a phenomenal product. It really helps with blood circulation and has a lot of creatine. Yeah, go ahead.
The reason that I brought it up is because some of the things that we've discussed both with you and with Casey are things that aid, or, for lack of a better non-medical term, kind of, jumpstart your immune system.
Mm-hmm.
And right now, the biggest area in biotech is based around using your immune system to fight something from within. I think Intercept, the one that went from 80 to 500 in a period of under a week, is in that field, as is, as are a couple of the other, really big movers lately. And so, it's nice to realize that there is the opportunity to be involved with these things on a prophylactic basis before you need them, as kind of a maintenance or, before you have a problem kind of issue. So,
yes,
so that speaks very well for not so much any particular product as much as, kind of the context in which medicine and biotech is looking at things like cancer, things like, hepatitis, things that attack, your individual organs where, clearly, if you can get your body to fight it off itself, that's a gigantic step.
Yeah, and it's funny as us boomers get a little bit older, and I'll be 69 next year. You just think, okay, after all these years of abuse, maybe I could take something that might help my immune system now.
Yeah.
It's like, okay, I don't think it quite works this way, but what the heck? We'll give it a shot, right?
Yeah, it's funny you mentioned your birthday. My birthday was on Saturday, and I was 64, and I was on the phone trying to set up the payment for something, and the woman on the other end of the phone said, "Okay, what's your date of birth?" And I said, "Today, 1950."
And she,
she was, "Oh, happy birthday!"
I was going to say, if she asked you what the date was, then you really have a problem, right?
Yeah, right.
Oh my, yeah. Well, happy birthday, belated happy birthday to you. Yeah. But yeah, I think you are hitting a real nail on the head here, where I think the whole realm, the whole spectrum, if you want to call it the natural culture, it is changing. I remember, oh my gosh, 18 years ago, I guess, when it may have been 20, when Dr. Schwartz went on. This is a local chiropractor here, and I mean, people thought he was a total whack job. And, and he was just talking about all natural stuff and things like that. And, of course, we had a nutrition store that was on Nutrition World, still on the air with us 20 years later. And you start thinking, okay, people are starting to think a little differently, and so and even the elder population is thinking a little bit more on the natural side. It's kind of interesting to see how it's all kind of come around. And God, that'd be great if Casey can get on the bandwagon there with a major infusion of cash and stuff. That would be great.
Yeah, it looks like it's all on the way.
And it's Tsunami Strike for new listeners. It is tell us, Mike, you and Charles both have taken it for years. What does it do exactly?
The Tsunami has 8 kg in it, which improves circulation. And it also has creatine monohydrate for mental alertness. So put that together, and it helps you in physical activity, but it also helps you when you wake up in the morning to get a fast start. So it helps in both ways.
Sounds good. And Charles, you use it for your racquetball, right?
Yes, I have.
Good. All right. And does it help at all in the recovery side of it? The few aches and pains that you might get after a pretty long racquetball match. I mean, does that have anything to do with that?
That I can't really swear to, but only because, up here at 64 and being a little overweight, I tend to, take a couple of ibuprofen before I play, and then another, take 2 before, and then I take 2 when I get home.
Okay.
Otherwise, and that kind of kills the aches and pains, but I haven't tried it all by itself to see if it, really helps that way.
Mm-hmm.
But it has definitely helped energy-wise and, for playing. I mean, there's a noticeable difference.
Wow, that's very interesting. That's neat stuff. Well, let's talk about, Michael, how do we get the newsletter?
Well, first, let me do a Rule 17B disclosure for Target Energy.
Oh, yes, that's right.
Target pays Princeton $2,500 a month for investor relations. And for that, we write research reports and do extensive research, as well as helping to provide information on the company to the public. Because this company has such a wonderful potential and is so little known. It's just a question of getting the word out.
Mm-hmm. Exactly.
Because Lawrence is a brilliant producer. So many from Australia are, and of course, all of their production is in Texas and Louisiana.
Mm-hmm.
And those areas, all the areas in the south and southwest are improving their production with new technology. Oil production in this country is just improving day by day. You can look at all of we have lots of reports, and if people want them, they can just call me for them. 702-650-3000. We have lots of reports on U.S. production technology improving day by day.
Yeah. Yeah, and that's where you can't go more than a couple days looking at like at a CNBC or a Bloomberg or something without reading about some new technology that's hitting that industry. You are correct. Yeah.
I mean, there's one every day.
Yeah,
I mean,
that's
there's
right,
at
Charles.
least one biotech company every single day
the
in
new
each
problem
direction.
that we may be faced with is the global warming scenario with extreme weather in each area. Like Charles's area is getting more snow. Our area gets no rain, no water. We have drought problems in the southwest. Other areas of the world, like you saw in the Philippines, huge typhoon.
Yeah.
Lots of water. In other words, the weather extremes are pronounced by global warming from all of the carbon coming in from the massive amount of carbon dioxide going into the atmosphere.
Interesting.
The downside of the great production that we're doing.
Yeah. Charles, how do we get your texting service?
You simply text the word updates, UPDATES, to 69302, and you will be included. Also, a reminder, if you want to know exactly what's going on, what we're looking at, and what the actual positions are in the account, you go to Dashover, DASHOVER, dashover.com, and you will see all of our information there.
Do you have to have a password?
Nope. All you got to do is just go to it.
Wow, dashover.com.
So what are you doing with Alcoa? Do you like it here?
I still like it. We haven't been stopped out of the option position, as well as we haven't been stopped out of the Groupon. As a matter of fact, the Groupon is actually still profitable. We did get stopped out of the Home Depot, and I had an order in over the market in the Bank of America warrants. They cost us 78 cents. They're currently 89 cents. I tried to sell them yesterday at 94. They traded a couple of 100,000 at 93.2, and then came back in as the market got worse. But yeah, I still like the Alcoa. I think with the move towards lighter trucks, 700 pounds is a dramatic reduction.
Yes, it is.
Most of these things, in the old days, you drove a Cadillac, it weighed 5,000 pounds.
Yeah.
Now, of course, we don't use chrome bumpers anymore.
Yeah, that's right.
Or fins.
I like all of your positions. I also like the SPXU as a hedge to be long, buying that around 69.80.
Right.
As a hedge.
Very cool.
Until we get through this debt crisis.
Yep. Yeah. Okay. Well, hey, guys, thank you very much. Mike King in Las Vegas. Charles Moskowitz in Boston. Princeton Research. Go to princetonresearch.com. Get that newsletter. Get Charles's texting service. And don't forget his conference call every Wednesday, WPSL 470.